starting to say, actually, these higher energy prices, and that actually means that central banks may take a more hawkish, have less inclination, and actually, the focus could be on growth. So that data may feed into some of that, but I think actually something that's backward-looking, particularly on a market closure day, is going to be difficult to really read too much into.
Yeah, so that's the US employment side. We get, before that, midweek, we get the Eurozone inflation picture. I wonder if that actually threatens to have more of an impact. It is data for March, at least, and it does relate to that pivot that we've seen in bond markets. You know, bond markets going from thinking about inflation to thinking about growth. They could get a reminder come the middle of the week about the inflation risks, I suppose.
Absolutely. I mean, we saw that to an extent, even with last week's CPI for the UK, which was, February, and actually we saw it in Europe as well, where it's like, oh, but even before March, things were actually not quite as good as policymakers would have hoped. I think certainly if it comes in hotter than expected, particularly given it is full March, it will be the first time we really do see some of the actual impact on inflation that the conflict is having, that the higher energy prices are having. Although, of course, we still haven't seen those higher energy prices properly filter through to households. Perhaps we have seen it at the fuel pumps, but we haven't seen it in terms of energy bills. That tends to be a bit more delayed, but we will start to soon, and that will be really watching.
Morena, thank you very much. That's Bloomberg's Morena Conium, and that does it for the opening trade. The Pulse with Anna is coming up next as we look at the Stock 600 now in the green, up 0.1%, and US futures getting increasingly positive, up 0.4% on S&P E-minis. That does it for the opening trade. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour only on Bloomberg Television.
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and a forum for sophisticated conversation. This is Bloomberg Surveillance.
At 9:30 a.m., deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to
Brent crude on track. US, most of its demands to end the war, even as it remains unclear whether either side is directly negotiating. And treasuries rise on concerns the war will trigger a sharp economic slowdown. Money markets also slashing the odds of a Fed rate hike this year. Let's check in on some assets for you, and we'll start with the energy prices. We see oil prices up by 3% this morning on Brent at $115 a barrel. That is the handle. The WTI price, incidentally, has gone over $101. The copper price is a little firmer this morning. We've got European stocks just pretty flat. US futures moving higher, up by 0.3%. The US 10-year yield at 4.39%. Quick check on yield at 4.39%. Quick check on what's going on the inflation picture out of Germany. We are gradually building up today a picture of the German inflation story, and it is coming in much higher than the prior period, as you may expect. The Bavarian March consumer prices rising by 1.2% month on month. That is a whole percentage point higher than the previous month, which is something of an Iran effect. Let's take a look at how European markets are responding right now. We've got European equity markets are flat to positive, up 0.1%. The FTSE 100 is up by 0.4% as energy and basic resource stocks are pretty resilient this morning. The CAC 40 pretty flat and the DAX under pressure. For the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning and welcome to The Pulse. I'm Anna Edwards in for Francine Lacroix here in London. Now, President Trump says that Tehran has given in to most of the U.S.'s demands, even as it remains pretty unclear just how the two sides are negotiating or talking to each other via intermediaries. He told reporters on board Air Force One that he believes an agreement could come soon.
Sir, could you foresee a deal in Iran this upcoming week?
I do see a deal in Iran, yeah.
Mr. President,
could be soon.
They offered a 15-point plan to Iran. Did they ever come back?
Yeah, they came back on the 15-point plan. They gave us most of the points.
The U.S. president also told the Financial Times he wants to take Iran's oil. This as an additional 3,500 U.S. troops arrive in the Middle East. Joining us now, Bloomberg Horizons anchor Jumana Basecci. So, Jumana, bring us up to speed with the latest and what's been happening. Despite apparent talks or talk of talks to end the war, we are seeing plenty of further signs of escalation over the weekend.
Yeah, that's right. And President Trump there, in a few of his comments from the weekend, suggesting that Iran do want to make a deal still. But I've got to say, over the course of the weekend, there are no signs that there's been progress towards any diplomatic solution. So, if anything, there's been more military escalation over the course of the weekend. Friday, we talked about the arrival of that MEU, the Marine Expeditionary Unit, to the region that comprises of around 3,500 troops, around 2,200 Marines. Questions really about where they're going to be deployed and whether President Trump is actually going to follow through on some of those suspected plans to take over Karg Island or even deploy them along the Iranian coastline. At this point, we don't know, but the fact that they are in the region signals that there is the potential for further escalation. At the same time, the joint Israeli-U.S. military operations in Iran continue. President Trump has said that they have struck 10,000 sites. There are another 3,000 sites that they're looking at targeting. On Friday, nuclear research facilities were targeted alongside 2 steel facilities. And in reaction to that, Iran once again lashed back at Gulf Arab states' infrastructure. We're talking about the targeting of 2 key aluminium smelters in the region. Over here in the United Arab Emirates, we're talking about Emirates Global Aluminium, some disruptions there in Bahrain, also Alba. The UAE sustaining their biggest night of projectiles in over weeks, in a couple of weeks over the course of the weekend. And ongoing attacks in Saudi Arabia as well, and a key one at the Prince Sultan Air Base, which resulted in casualties and 15 servicemen being wounded, alongside some heavy damages on U.S. aircraft as well. So really no signs of things de-escalating for the time being, Anna.
Yeah, no signs of de-escalation then. And oil advances today, continues to advance, up by 3% on Brent, just shy of $116. It's been over that mark, of course, in the last few hours. What impact could the involvement of the Houthis in this war have on the energy story and the ability to get energy out of the region?
Another very important development that you raised there. On Saturday morning, Houthis did enter into the war. They targeted their attacks at Israel, specifically a couple of attacks on Saturday, mostly intercepted by Israeli air defense systems. But it does mark a new entrant into this war. And perhaps some people were surprised that it took them so long, given Hezbollah had also got involved in the war in solidarity with Iran. For now, the language out of the Houthis seems to suggest that they're going to continue to target their strikes at Israel. Remember, they did counter a truce with the U.S. in May 2025. And since the October 2025 ceasefire, Israel-Gaza ceasefire I'm talking about, they have not attacked ships or disrupted shipping on the Red Sea. Now, of course, all of this may change, and it is a major risk looking ahead to markets, not least because successful at rerouting a good chunk of their oil exports through that east to west pipeline. We reported over the weekend that they're now using it at full capacity, around 7 million barrels a day, 5 million of which is exported from the Red Sea. So, of course, does indeed pose a risk there, but no signs as of yet that the Houthis are willing to disrupt either the truce that they have with Saudi Arabia signed in 2022 or the one with the US in 2025, but a risk for the market. I will just say that speaking to energy experts and reading the flood of research that's come through this morning, the consensus is that the longer the Strait of Hormuz remains effectively shut, the more you're going to start to see physical disruption in this market. And indeed, that is one of the reasons why you continue to see this uplift in prices. I'll just leave you with a statistic, Anna. It is estimated now that about 11 million barrels a day have been taken off the market because of the disruptions around Strait of Hormuz. Even before the war took place, IEA were estimating a surplus of around 2 million barrels a day. So net, you're still talking about daily 9 million barrels a day of oil that's being taken off the market. Cumulatively, it's having an impact. And what's happening now is the physical supply destruction is one that's really beginning to show up in these markets, and hence why you continue to see that upward pressure on oil despite the several measures and policy announcements that the U.S. administration have made.
Yeah, upward pressure on prices for sure. Jemana, thank you very much. Bloomberg Horizons anchor Jemana Besetcha. Our next guest is dialing down risk on the supply shock from the Middle East. Let's bring in Wei Li, Global Chief Investment Strategist at BlackRock. Wei Li, nice to have you with us on the program. So I want to get into some of the inflation dynamic or dialing back risk. What is the approach that you're taking?
Well, last week we noted that there is a disconnect between equity pricing and also the broader market and supply disruption. So when we were looking at U.S. equities, still just 4% lower from the beginning of the conflict, that's just not consistent with the oil market pricing in doable disruption. So this is why we dial down risk. But right now we're actually really thinking about thematic opportunities that will be accelerated by events in the Middle East. No matter what happens from here on, importers, and 60% of them live in countries that are natural gas importers. So we're talking about environment, really supply is disrupted, but perhaps also takes longer to recover from, because we're talking about energy infrastructures being impacted. And also it's possible to see that countries will focus on kind of building resilience and also stocking up inventory even after the war. So when you bring all of this together, we're in this environment for longer, supercharged environment of world shaped by supply. So we're talking about an environment where we look at energy independence, and it's all of the above when it comes to energy choices. That was already the case last year. We put out a research note talking about how in the context of AI data center build out, we need to tick all the energy boxes, but now even more the case, right? So you look at energy as a sector in U.S. equity market, S&P 500, it's just 4% of the index. It's foreseeable that could grow, and that should grow, reflecting the greater significance. And you look at, like renewable, clean tech, these are the themes that we find it really interesting right now.
Okay, and we know that there's all going to be gathering today to talk about some of those things, energy independence and the importance of investing in it, Wei Li.